So the last day of the trading week was indeed being positive on Wall Street, but whether it will translate into a good week forward when we are entering into a week where FOMC meet or the Fed comment will, you know, decide the market direction. So that is something we need to look at. So let us see what has happened on Friday, the 28th of, or rather 27th of January, and what will probably happen on 30th of January. That is something we are going to discuss. And there is, I mean, as of now, there is no such indication that we will go beyond the range, as I keep on maintaining my view that stay within the range. If we do have some sense or some sort of direction which is clear, then it is fine. Otherwise, we will remain in between the range. So this is the price chart of Dow Jones, and you can clearly see for the last couple of weeks Dow Jones has been trading in between a range where we have our resistance starting from 34,350. Let me adjust this and you will see 34,350. Then we have 34,626 and 34,740. Simultaneously on the downside we have 33,335, 32,977 and 32,610 as far as our support level are concerned. And as I told you, you rather trade the edges or wait for the breakout or breakdown to decide whether to go long or short. So that is something which we need to understand and look at, because if you want to take trade right now, things can go on any direction. So better to avoid where the trend is not clear. There are n number of instruments. Okay, now talking about the Nasdaq, because Nasdaq has performed quite well relatively. So this is the trend for Nasdaq, and you can clearly see Nasdaq is showing a better trend because there is a range breakout that has happened. So Nasdaq has been trading in between a range for the last 2.5 months, and then what we have seen is a breakout above 11,510, 11,575. So what one can do here is consider 11,574 as your support and 11,500 as your stop loss. Please don't go below 11,500. Simultaneously on the upside we have 12,290 and 13,100 or 13,150 as far as the next couple of targets are concerned. So here the trend or the price move is much more clear comparatively when you are comparing it with Dow Jones. Now about S&P 500, it is giving you a different picture. Okay, because S&P 500 is trading very near to resistance. So first of all, don't trade this range. That is the most important thing. Okay, don't trade this range. So you have 4,100 as your resistance. Let's wait for the breakout. Only if S&P 500 sustains above 4,100, then one can go long. Otherwise, if it falls below 4,034, then a short trade will open up, and in that case, once S&P 500 started trading below 4,034 or less, then you can consider 4,034 and 4,100 as your resistance, and you can go for 3767, which is the lower end of the range. And if you want to go long, wait for S&P 500 to surpass 4,100 and then take any decisions. And in case of a breakout, you have 4,200 and 4,330 as far as your next couple of target. So each and every index is giving you a different flavor. One is range bound, one is near resistance, and one has already given you a breakout. So this is the end of the video. Thanks for watching.